Hello and welcome to another tutorial of how to trade DAX at the London Open. In this tutorial I have a special topic covered, which is what to do when nothing happens at the start. So we have been sharing trades and stuff, and it looks beautiful when you look at the trade and you look at London Open and it just breaks out into a beautiful setup one and you take a trade. But sometimes, but actually probably half the time in normal days, it doesn't do that. So what do? Apart from the obvious answer, which is to not trade and just wait. A really simple way to go about this is assuming you have the M5 and M1 chart set up ready. Now this is very important. The reason I'm covering this now, this concept of M5 and M1 chart, and the reason I show this M5/M1 is that this technique answers the question of what to do when the market is going sideways. So this is the type of the chart that we want to see. You want to display your chart like this. Now in one of my other videos I explained this, that if you bring 3 charts, so let's say 3 of these charts, and then you hit that button, it can align vertically, and then you delete one chart and then drag one of the middle one to the right. What you'll get is the 1/3 of the chart is going to be your M5 chart, and 2/3 of the chart is going to be M1 chart. And this is important because these things, let me bring my arrows. So as you can see around here, this high and that high, they're the same, right? And this is the current price, which is here. So all of this that has happened in 1, 2, 3, 4, 5 or 6 candles, 5 candles. This is going to be 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You get the point, right? M1, M5. So that's going to be 25 candles. Inside those, price has gone down, up, down, up, down again. And the most important bit over here was that it has created this. See these levels? So that has created the box. Where are they in this chart? Where this is the candle low. That's what it's pointing to, right? So this has gone up and then down here. That's this. And then this sideways around here is basically this. And then when this breakout happens, you are in line with what we call the double AIMS level, and you catch this breakout. But anyway, let's move forward. So the first step, look at the hourly chart. So I'm going to go through the quick routine of how to trade it first thing in the morning. So let's suppose you started 5 minutes before the London Open, which is 8 a.m. What you'll do, you look at the hourly chart, right? You have a quick look. So this morning, the hourly chart looked something like this. So what we see is about 5 days of data. We're not really interested in what's going on as much, because even inside a single candle, we can trade. So what you need to do is to mark a couple of levels. This gives you a chance to mark some box highs and lows, which are these levels. So this level, this level, this level is good because it's from yesterday, and it's also, interacting with that one. Around here we have these levels. So you could probably have a horizontal line on this or this, and most importantly this one. Actually, I would prefer this one right now, because as you can see that this 2 hours before, oh, I forgot to mention. So this is the Frankfurt Open, and this now, right now, around this point is the London Open. So these 2 candles have told us that price was rejected at these levels 2 hours before London Open, and then it went up. So that's it. Now we go to the M5 chart, and we don't need to do more analysis than this. Even if you started before and you just had the screen like I showed you in the M5, M1 split chart, and you didn't look at the H1 chart, it should be alright. Because all we need to do from the H1 chart is to identify some targets. But we don't really need to actually do that because of the way the method is. So what we saw in the M5 chart was this. Price went up, came down, up, down. This is those two H1 candles. That's the information on M5. So like I said, if you have the M5 chart, it gives you enough information. And these are your relevant levels now. So this is where price is at the London Open. You know one thing, price is going up. For you, at this time frame of our trading, price is going up. Gator is open. We can't see it here. It's going to be here. The red would be here. The blue would be here. And purple will be somewhere around here. We will get to see the full chart anyway later. Now we go to the M1 chart. So remember, the chart is displayed with M5 and M1 split. So we are seeing both the charts at the same time. But on M1, this is what I saw. So what happened is that price started here at London Open and immediately broke down. So in 3 minutes time, it went all the way down. And around this time, then I'm thinking, okay, so the first thing was to see whether there was a setup 1 at M1 at the London Open. There was no setup 1. So you can see that it just smashed through these levels and dropped at the London Open. And there is no setup. So what do? We wait. So my thinking was that, okay, price broke below this. But I can see clearly that this is where the first wave was. This is the pullback. And this is another wave. Remember the important thing that we talk about? Push, pull, push again. So this is some form of 1, 2, 3, 4, 5 has happened. And this has gone against it. But it hasn't broken the low of this. So this now tells me I'm in some kind of a range. I would now want price to break out of this, come back to it, retest it, and then go down. Or for it to go up, come back to it, retest these levels, and then go up. So we wait. But the question is, what to look for at LO, at that situation, and how to tackle it. So first we check if we see a proper setup 1, right? Like I mentioned a few minutes ago. The first thing you look at after when you look at the chart at M1, M5 at London Open is that, is there a setup 1? Now, if you don't know what a setup 1 is, there are videos on it on this channel. If you're a member, you know you then have a lot more resources in the members area to understand what is a setup 1. Or if you're a stage 2 and you are trading the Hunt signal, then you know how to look for a Hunt signal. If both of them are not there, then you want to do this. You want to wait for an immediate and sudden move. Like a sudden move. Now, like we saw on the slide before, there was a sudden move, but it was still inside the range. You want that sudden move to break a range. So then it comes to this ability of you drawing or understanding what is a range. So with a little bit of practice, you will know what I mean. So if there is no setup 1 ready, then that means the market must be in a sideways range, right? So mark the high and the low of that range like we did. So 20 minutes later, this happened. So I see the chart, and so I've marked this area, I've marked this, but most importantly, I have marked this. After the 3 minutes of London Open, price started to go up. So my thought was, okay, it's about to break it. But I'm not excited here. I want this price to go up and break it, kind of go up like this, and then either go sideways, create a setup, or come back to it, retest it, and then go up. This is not what it did. As we can see, it was rejected at the highs, comes back to it, doesn't go down, so it kind of starting an uptrend, tries to break again, but fails again. That's it. I'm done. The chart is looking ugly and is going sideways. I'm not going to mess with this chart again. I have identified a micro range around here. This box indicates that. Price is really stuck in these 20 to 30 minutes. It's really not going anywhere. It's stuck within a tight range. But at this time, one very important point is now clear to me. As we can see, the macro range, big range of the whole thing, and this will be visible on the M5 chart even more, but on the M1 within those 20 to 30 minutes, it was within this micro thing. And what is clear to me is that it's not moving. What we saw on those charts, it's going up and down, it's kind of a wiggle. It's a vibration. It's going up and down. It's not really moving. It's not trending. That is the most important, the most fundamental point I need to know. And that is the sole purpose of this presentation that I'm doing for you. You have got to understand this. This is the trick. This is the secret. Learn this trick and your trading success will be around the corner. If you're trying to make money on the M1 and M5 chart, and most of us don't have that much money to invest it in different stocks and stuff, so we only have small account. If you have a small account and you can only trade one market, and you are trying this and struggling, learn this trick and you will know what to do. Now, what do you do after this? Like we've learned this, that it's in sideways. So one option, the most important one, which is a very simple answer, is wait. You wait. Don't do anything. One of the most important things in trading is to learn to sit on your hands, to not do anything. Do not commit yourself, because when you don't trade, you're not risking, you're not losing. This is the story of my life. And it is the story of any trader. All good traders learn to wait. But wait for what? Right? Wait for what? And that is a very good question. Do we wait? How long do we wait? What do we wait for? When do we know the wait is over? The answer is, again, very simple. Wait for a strong and clear breakout. That's what we wait for. So we've identified the range first. Then we wait for a breakout. That's it. You wait for breakout. Now there are two ways of waiting. Do you wait while you are staring at the screen, or do you wait outside in the garden? Right. So let's see what happened 2 hours later. So that's that period where I left the chart. And I was doing other things, trying to create a presentation for this video and playing with my son and stuff like that. Meanwhile, market is going sideways. As you can see, that those two moves, see this one at London Open and 3 minutes later this one, that's where market has stayed all this time. Can you see it? Or shall I draw it for you? See, from here, it went down, went up, tried to break this, did not break it, tried to break it again, was not successful, stayed sideways, but did not break this. So, because it didn't break this, it's not an uptrend. Because it didn't break this low, it's not a downtrend. It's a sideways. Comes back to it, this level, can't break it. Comes back, can't even break this level now. Goes back up, can't break this level. Stuck. So if somebody was telling you support and resistance is important, this is what they mean. Nothing else. If you were to draw random horizontal lines on the chart, they would look very beautiful in backtesting, but that doesn't really mean anything unless you know this. Why are you looking at it? What are you looking at it at these levels and why? and the interaction between. And you have to learn to localize it. This is localizing those levels. So this is where you identified it. This is where you saw the interaction. Comes back. This is not an important level. It's inside the range already. But it breaks it, interacts with this level, right? Doesn't go below this. Can't even come here. Goes up, try to test this, knock down, breaks this level, goes up, interacts with this level, little bit, this time successfully breaks it. As you can see here, it's breaking it. And that is where you will know that some kind of breakout is happening. But not just one candle. You have to let it go. You have to let it break that level. And notice this seed. It will be important. When you look at it later, it would look like, wow, what a seed it was. And surely it was. But could you have taken this around this? So beginner traders don't know. When they do back testing, they would count this one as a good trade as well, not realizing that you were going through a lot of this stuff. Let's move forward. So you can see on this chart that the market finally broke the range. You see that the red arrow, I can leave the screen after this. After this initial analysis. Sorry, what I meant is after this analysis. I can leave the screen. Right? So that was 20 minutes into London Open, around here. I was off the chart, was brought back. But what brought me back to it was the alert. The alert that I'd set up here. So I had a price alert on the MT4 chart. You can use ATM. If you have the ATM, you can use the inbuilt beautiful feature that you can set. There's a line. Or you can use the standard MT4 feature. So let's suppose wherever your cursor is, right click on your mouse. This window will come, go to trading, and then alert. And this will set up an alert for you. So when price goes through that level, you'll get that. Of course, you'll have to do the settings for the alert in MT4, and that's a different topic. Also notice this seed. It looks awesome, right? But not within this chart. It is an illusion. A backtesting illusion that might haunt you. So be careful. You will see in the next picture, this seed will look like an amazing spot for entry. But it's not that easy. Why? Because, like for me, my trading gun was put away. I wasn't trading. I was waiting for this range to be broken, to see something. The confirmation of momentum. So I had to see the market that I had to wait for it that it breaks the range. Once it did that, we saw this picture. So this yellow line shows the range high from earlier. Let's go back. See this level? This will be extended. This level shows that range. See a bit down, 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 goes up. That's that seed. Now it looks beautiful, right? If you took it, your risk would be only 6 or 7 points and you made about 70 or 80 points. A lot of profit. But it's an illusion. It will be a risky trade. If you keep taking trades like these, you will pay a lot of rent. Now, is this a picture of a perfect setup one? I want you to pause the video before you answer. So pause it now. Is this a good setup one? Yes or no? Yes, it is. Congratulations if you got this right. This is the setup one that we look for, and we only take it this way. So I think this is a very good and important video for you. If you don't know why sometimes there will be a setup one on the M1 and we won't take it, it's because of this analysis. So you look at that range, and when market breaks out of it and then you have a setup one, we take this. This is a beautiful setup one. Towards the right of the screen, you see a very tight box. You see the purple correct. If you don't know what purple correct means, check the AIMS Gator video that I uploaded the video before this. 22nd of April, I think. You see a peak of AIMS wave. You see a peak here. And then, so this is a peak, then the cross of zero line. and tight box. Don't forget the work that you've done already, the work that you've done, sitting there at London Open, analyzing that, doing your alerts, they all count. So you made sure that the market has broken out of a range. There is nothing to the left of this peak and this peak. So from the AO analysis, there's nothing. There's no higher peaks. This is the highest peak in the last 100 candles. And on price, during your day, your session, these were your levels to the left. It has cleared it now, and it hasn't come back to it. So the market has only one way to go, above that. In wave counting terms, you have seen a wave 3, and now it's a flat wave 4. My favorite. So this is wave 3, that's wave 4, close to zero line. On price, this is wave 3, and that's your flat box, tight box. On the M15 chart, this is a famous setup. Yesterday, like if this was the hourly chart, this would be yesterday's chart. This would be the Asian session, and this would be London Open. That is what famous is. Notice I said flat wave 4, because there are two types of wave 4s that we take. Well, there are three types really. There's a flat one, there's a zigzag, and there's a shit one. We only take the flat one and the zigzag one. But the flat ones are perfect for the setup 1. The zigzag ones are for the Apple setup, which is a different topic. The flat and the zigzag, look for a video in the future. I will be making a video about each one separately. So each wave is different. What's the word? They have different personalities, if you can say that, because they're not human beings. So, but it's a metaphor. They have this little things about them. Every wave is a little bit different, and I will discuss those later. So why do I like the flat wave 4? Because they give you a big risk reward ratio. So here we won 2 green boxes. The red box, and let me explain, and actually I can draw it as well if I can find my box. If you look at this red box, I drew it like this. Then what I did is that I copied it and just moved it upwards. So this is the space, the range of this box. Your entry level is there. That's your entry, your pending order, and that's your stop loss. And the range of this is what you use to calculate 1% risk. Now when the market moves the same level, this is the space, right? The numbers. And the same amount of space it covers, when it comes here, you are in 1% profit. If you are taking 1% risk, at this point you are at 1% profit. And then the same level of space it covered again, at this point you are in 2% profit, and your target point is hit. So these tight boxes, we like them. Here we have made 2 green boxes at the risk of 1 red box. If price triggered us and went down, we would have lost 1%. But if it went towards the target zone in our favor, we made 2%. And that is what we have. Why this? Let's go into that a bit. Because we win 70% of the trades using this method, setup 1. Here's the breakdown. So we know some are winners, some are losers, yet there are others we call BE, the break-even trades. So 30% of the time we lose $100 per trade. Let's suppose you have a $10,000 account and you risk 1%. 30% of the time you will lose $100 per trade. But 40% of the time you will make $200 per trade. And 30% of the time we win $10 per trade. We just win back the commission. And if you're trading with spread betting, then there is no commission. Or if the broker is not commission based, then it will be a 0 trade. So what does that mean? Can you make $500 per 10 trades? You can. So here's the breakdown for this. For a $10,000 account, 3 losers are $300 loss. 4 winners, because each time we win, when we win double of what we lose on each trade. So that's $200 turns into $800. So let's suppose the break even are zeros, because even if you make $10, that's just the cost, so forget that. So 0. So as a whole, well, we can see simple math. 800 is the total profit less the losses. You're left with $500 every 10 trades. So what is this? A very simple technique of doing it, but patience and discipline. If you like this video, please hit the like button and subscribe so that you get a notification, and hit that bell button so you get a notification every time there's a new video. More videos like these will be uploaded. I am working on a lot of them. And so I don't release all of the videos. Some of the videos are for members only. If you would like to trade like us and use our indicators and learn more, we have quite a lot of things in the members area where you can learn step by step all the lessons. So please do comment below if you like the video and what other kind of videos would you like me to do, and if you have any questions.
Thank you for watching. I hope you liked this video, and if yes, please hit the like button. Do you have any questions or ideas for upcoming videos? Then leave a comment. Also subscribe to the channel and hit the bell icon so that you never miss any future videos.